let's take a look at the currency picture first and foremost, and your perspective on the value of the Naira right now and whether devaluation as proposed by the IMF is in fact necessary.
Well, I do not think that devaluation at this point in time is necessary, because if you look at, in the first instance, why is the call for devaluation? One is the fact that there has been a depletion of the external reserve of Nigeria in recent times by about 23% from $42 billion at December 2009 to $23 billion in December 2010. That is one factor. Another factor is the fact that there have been an offshoot in inflation in recent times. And so when you talk of Naira parity with other currencies, you may want to say devalued, but you also note the fact that the major currency benchmark of Nigeria, which is dollar, has depreciated in recent times. And therefore, if you look at it from that perspective, you will discover that there is really no need for devaluation. And again, if you look at other positive developments that affect Nigeria, one is the fact that international crude oil price has been on the increase in recent times, which means that, I mean, the ability of the CBN to meet demand for the dollar is very high. And again, you also see that production of crude oil in Nigeria has been on the increase in recent times from slightly below $2 billion at a time, barrels per day at a time, to over 2.5 million barrels per day in recent time. And so if you look at it from those two perspectives, you discover that what we experience in terms of depletion of the external reserve in recent times is temporary. And therefore, you do not use a measure as drastic as devaluation to address
this within what kind of growth story, Yomi? Let's take a look at the economic growth picture over in Nigeria as you see it for this year.
Yes, in terms of economic growth, we also look at factors that may move up growth in this year and going forward. One is the fact that from every indication, Nigeria has been able to weather the impacts of the recent global economic crisis on the economy very well. And the fact that, again, like I said, production of oil is upwards, prices are up, and therefore, in terms of growth, you expect that there will be growth from the oil and gas sector for this year. And also, you also expect growth from the agri sector, which has been a major driver of growth in Nigeria in recent times, contributing over 40% of the GDP. As long as the weather is favorable and the land acreage under cultivation in Nigeria has been increasing in recent times, so you expect growth from those two main sectors. The other non-oil sectors are also experiencing growth, and after the election, as long as the election goes well, you will discover that production in terms of business capacity utilization will increase, and even international investors will be more interested in Nigerian economy, and you expect that overall growth will be reasonable this year.
Of course, a lot, Yomi, will be hinging on banking lending. To what extent will the AMCON purchase of non-performing loans boost bank lending within Nigeria, in your view?
Well, we have to first look at the factors that account for recent decline in bank lending in Nigeria. One is the fact of the impact of the global economic crisis on the economy and the banking industry. And you expect, as it has happened all over the world, that banks will be more risk-averse because of that factor. And also, even business prospects in recent times, even businessmen are not forthcoming in terms of application for loans because they are also not very sure of what the prospects are. But like I said before, Nigeria has been able to weather the effect of global economic crisis reasonably well. And again, you expect that after the election, things will be upbeat in Nigeria. And therefore, from all indications, lending should move up after the election. But again, not just because of AMCON purchase of non-performing loans, because you will discover that even before AMCON initial purchases, liquidity in banking industry was very high, over between 40 and 60% in most cases, and capital adequacy ratio was also very high. So it wasn't because banks don't have the capacity to lend. It was just because, mainly because because of the impact of the economic crisis, and the fact banks decided or preferred to hold more liquidity and capital adequacy ratio to cushion any further effect of such uncertainty. But
absolutely, Yomi. Unfortunately, we're out of time, so we're going to have to leave it on that note for this morning. Thanks so much for your insight today. That, of course, Yomi Olorungbeja, who's the head of strategic planning over at Diamond Bank.